right, let's do it. Calls of the day. And Brian, I'm coming to you on this first, okay? Because Netflix is a big position. It's a top 5 stock for you. So we set the stage here. Piper Jaffray. All right, Piper Sandler. Piper Jaffray. I'm going way back.
Old school.
Old school OG. The OG. I've been here a long time. All right. Piper raises it to overweight from neutral. Target raised to 800 from 650. Barclays cuts it to underweight from equal. The target's 550. What do you think about this stock here?
Well, as you know, I was the chief strategist at the OG 20 years ago at Piper.
30. You're 30. You got me. Yeah. You've been in this business 30 years. You never cease to let people remind people of. But anyway, carry on. I digress.
I don't have a Dan Ives coat on anywhere. But if I had a Dan Ives coat on, I'd put it on because I think this is a $1,000 stock. I think this is a top 25 holding that people should own in the United States, let alone the world. It's the Kleenex of streaming. It has won. How much on the network you've talked about the perils of streaming and with respect to how expensive it is. They have crushed it. They're going to continue to crush it. This is an absolute buy here, and you continue to hold. And I think Barclays will come back to the stock relatively soon. You know
what's interesting? Joe, Piper has $800 as their target. Barclays stays at 550. I mean, the delta between those two outlooks for this name is pretty remarkable, don't you think?
I think it's based on skepticism surrounding the valuation. Okay, the valuation has gotten a little bit rich. The Joe T ETF carries this in a long position, believe in the position. I think that when you take a long-term view of Netflix, you ask yourself the question, as it relates to market share, have they lost market share to the other streaming players? And in addition to that, have they lost operational leverage? Because when I look at all the streamers right now, guess what they're doing? They're not thinking about growth.
Are you asking that question, or are you asking it rhetorically?
I'm asking it rhetorically.
That's what I thought.
Those streamers are thinking about profits. They're not thinking about growth. And guess what Netflix gets to do? Netflix gets to continue thinking about growth and delivering on profit.
All right. NXP upgraded today. Joe, I'm coming back to you. To buy, target 285. That's at UBS. No?
Up 2% year to date. Clearly broken momentum. A little troubled by this stock. Deal with it at the end of the month.
Now, why do you think it's only up that? Because it's been more of an industrial type chip rather than AI pure play?
Exposure to autos, industrial, less AI oriented for sure.
American Express, you got that too. Downgraded today. Was overweight. Target to 286 at one point, and it wasn't that long ago. This was the best performing stock in the Dow year to date. Now, I don't have that in front of me right now, but I don't think it is anymore.
No, it's moderated some of the relative outperformance. Stock is still near its high for the year. They're delivering on revenue growth. Let's see what comes out in this upcoming quarter. And most importantly, I think with this stock, it's important what the guidance is going to be. Is there's going to be optimism in the guidance? By the way, I don't have a problem if you're long American Express and you want to trim the position here.
Brian, what about Schwab? The target gets dropped a little bit, $4, 64 from 68, but it's only reiterated equal weight at Barclays today. What's your view of the stock, which you own?
We own it in value. I think the CEO change is significant, especially considering the missteps from an operational perspective in 2023 that were not really communicated well when Schwab kind of missed their earnings. And I know that this has been a succession plan for a while. But again, from the wealth management perspective and what they do for their core business, I think they're going to continue to buy back stock. They're going to continue to raise dividends and continue to win in this RIA space as more and more open and start to clear through an operationally and custodial at Schwab.